market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Now, China's highly anticipated Finance Ministry briefing on the weekend lacked the firepower that equity investors had hoped for. As we said, though, Chinese mainland stocks are up in the session today. Beijing has promised more support for the struggling property sector and local governments, but economists are not convinced it is yet enough to defeat deflation in China. Let's get more on the market reaction with Morwenna Coniam from Bloomberg's Markets Today team, who's been tracking this alongside the team. Morwenna, thanks for joining us around the studio. So, the messages from the Ministry of Finance over the weekend were we will support the property sector. There was no dollar number. There was a bit of a hint from the Ministry of Finance or the Finance Minister that maybe they would expand the borrowing. We don't have that, of course, confirmed yet. And a little bit more support today in terms of the business environment in China. And mainland stocks have reacted positively. What do we make? What do you and the team make of what we've been hearing from China and what it means as to whether or not this equity upside has legs?
Well, that's a very good point. I mean, they have been gaining towards the end of the day in China. Yeah. I think that initial concern that maybe these didn't go far enough, there wasn't that dollar figure, and that is a real concern. But overall, the sentiment that is that there is this commitment to having that fiscal support, and that's gone a bit of optimism. We have to remember that although Chinese stocks have been quite volatile in recent days on this, they have been relatively undervalued compared to peers. That's for a whole host of reasons, and I think what the market's really trying to figure out right now is how much that's sort of fair and how much that there is room to actually invest and take advantage of weakness. We're seeing, obviously, the stocks have gained towards the end of the day on that confidence. Looking at what's happening over in Europe, the China-connected stocks, particularly looking at the UK, which my team does, things like the firms which have a financial exposure to China, like HSBC and Prudential, and the miners in particular, which are very dependent on Chinese demand, they're not underperforming, but they're not having a stellar day, and that really follows what we've seen, I think, in terms of, yeah, this is actually a bit reassuring, but there's no sort of big wow factor there. There's still some uncertainty. These measures have to be signed off at a meeting later this month, and that's really something that does have to be waited for. That's when last year, there was a revision to the budget. That's where really we're going to see a bit more tangible facts from this.
So we look to that next meeting for hopefully a bit more detail on these proposals. Meanwhile, US stocks, of course, notching fresh records on Friday, the 45th record for the S&P. Part of that was down to the JPMorgan and banking story. We have more bank earnings out of the US on Tuesday, and then, of course, the ECB decision. What for you and the team is going to be central for the markets this week?
Well, I think, you said, there is data coming out of the US this week as well, which will give you a better sense of what's going on with the sort of manufacturing industry. You get a few of those jobless figures, which the impact of Hurricane Milton starting to come through just on an initial basis. But all of that, there's a lot of data coming through. But earnings-wise, things are starting to ramp up. Like you said, US banks really positive at the end of last week, which saw a record. But in Europe, when we're looking at that, the ECB is going to be key. It has started to look like they might be considering another cut because we had that weaker data. That seems to be a persistent message. Concerns about, employment maybe not being quite as strong as it was. So that's really going to make an impact across the European markets this week.
Yeah, you and the team are going to be kept busy with all of this. Morwenna, thank you very much indeed for the preview, of course, of some of the key factors for these markets this week. Morwenna Coniam from our Bloomberg Markets Today team. Later today, Bloomberg will be speaking exclusively to the British Prime Minister, Keir Starmer, as his government hopes to announce billions of pounds of major investment deals in AI, life sciences and infrastructure. Let's cross over right now to Bloomberg's Francine Lacqua, who is at the UK International Investment Summit alongside politicians and CEOs, of course, from around the world. Francine.
Yeah, thanks so much, Tom. It is a packed room that you can see right behind me. We have a number of chief executives. We have a number of ministers. Larry Fink also flew over from the US. But I'm delighted to really talk about what's needed in the UK now, joined by Charlie Nunn. He's this chief executive officer of Lloyds Banking Group. Charlie, as always, thank you so much for joining us.
Thanks
if you were Rachel Reeves, what kind of message would you give investors today?
Well, I think the really important thing to get more investment in the UK is firstly clarity and a clear direction for the country. And so The stability and the clarity this government's trying to give, I think, is really important. Investors want to invest in the UK. They're looking at the UK relative to Europe and the US and Asia, and at the moment the UK looks like a good destination. But the first thing is clarity and stability. The second thing is, tell me where you're going to invest alongside us, and do it in a way that enables us to bring private capital to work. We estimate that there's about 40 to 50 billion pounds worth of investment per year for the next 20 years. So the government can't afford that, but the private sector really can make a difference. And then the third thing is really enable the financial services sector to unlock its potential to support that investment.
But Charlie, so you're one of the key components actually try and get this foreign direct investment into the country. Where would you deploy it? Where will it be deployed?
Well, I know the government's going to come out with their kind of industrial plan, and they're talking about 8 sectors. 2 examples that I think there's huge opportunity. One is around the energy transition, and the UK is already a leader around offshore wind, but floating wind, onshore wind, the growth in solar, and in some of the new technologies like carbon capture and hydrogen, there's huge opportunities to invest. And that also needs a clear plan for the national grid and the electrical infrastructure. That's one example of a huge opportunity for investment. Another's housing. So the government's made a commitment to build 1.5 million new homes. We need more social and affordable homes specifically. That's something we have called for as Lloyds Banking Group. And we really need to get the money invested, start going behind breaking down the planning laws and building more homes. And that'll be good for jobs and productivity and create an environment that we can get the skills for the investment in business.
But Charlie, so I guess a lot of people are concerned by the fact that, of course, this government needs banks, as you say, to bring in private capital, to deploy some of the money, to help them actually also help with the National Wealth Fund. At the same time, they're talking about taxing the banks. So how do you square the two?
Well, obviously, taxation's a matter for the government to talk about. But irrespective of whatever kind of political decision they take on that, as Lloyds Banking Group as an example, we've got a £900 billion balance sheet. We do 80 to £100 billion worth of lending per year. We have £200 billion worth of pension assets we manage on behalf of Britain pensioners. We need to put that money to work, and then we partner with some of the biggest world's pension funds, private credit funds, and our job is to bring our expertise to channel that into the UK. So there's huge opportunity for us to continue to deploy that capital in smarter ways that drives productivity, growth and jobs, to get the UK economy to being the fastest growth economy in the G7, which is a really bold ambition.
A number of your competitors, NatWest and Barclays, have done recent acquisitions showing basically that they really support this economy. Are you looking to do something likely as well?
So, we're now 3 years into the 5-year strategy I laid out. And the great news is it's very much a growth strategy, and we're delivering well against that. We're going to do an update in February next year on the first checkpoint in that strategy, and I'm really pleased with the progress we've made. We've done some bolt-on acquisitions, but the core of our strategy is an organic growth strategy. And the great thing for Lloyds Banking Group is we are typically the #1 or #2 player in every segment and product we participate in, including, in fact, in investment in the UK, project finance, infrastructure finance, housing finance, where we lead in the UK. So we'll look at acquisitions opportunistically. Our core strategy is organic, and we're feeling good about where we're going.
What do you want on pensions? Pension, but also there's a lot of talk on actually risk-taking, and this takes years, not months, that the government has.
Yeah, so pensions are such an important part of the puzzle. As I said, we are a leading pensions provider in the UK, £200 billion worth of pension money. And I think there's a few things that really matter. The first is we need to get more of our customers' money into pensions. About 40% of the UK households aren't on track for even a basic living standard. And obviously, giving them financial resilience is good for the economy. So we need to increase enrolment around pensions. The second thing is how can we invest it safely and appropriately for them in high-risk assets? And actually, that's more about conduct risk and fiduciary risk than it is around changing or asking the investment managers to invest more in those kinds of projects. We need to look at how do you support customers to make those choices in this country. And that's something we're talking closely with the government and the regulators about.
You know the new investment minister. How many questions do you think she'll field from international investors about the budget? Is this investment summit a little bit too soon, as we don't really know what happens to non-doms, what happens also to carried interest, and other questions?
Well, no, and the first thing to say is you can hear the buzz in the room today. It's great to see the excitement about investing in the UK and to have the international investors here. It's very, very early days for the new investment minister, I think 4 or 5 days in. I know her ambition is to increase overseas investment into the UK. And the kind of investors we're talking about are the big international pension funds, the big international sovereign wealth funds, the private credit funds. and they're going to be looking for good projects with a good return, with a government and a country that's getting behind making those investments successful. That's what will matter. It won't be some of the things you're talking about. And so I hope that she's really focused on engaging those kinds of organizations and then working with our financial services sector, which has the expertise to put that money to work. And we're the leading financial service sector in the world, let me say that.
Charlie Nunn, thank you so much for joining us. That was the Chief Executive Officer of Lloyds Banking Group. I'll hand it back to you in the studio, Tom, and then we'll be back in just a couple of minutes with Venkat of Barclays.
OK, great stuff. Francine Lacqua, of course, on the ground for us, speaking exclusively with the Lloyds Banking Group CEO, Charlie Nunn there, of course, talking about the opportunity in the capital markets here and how to deploy some of that investment. Coming up, we're going to return to the UK Investment Summit for an exclusive conversation with the Barclays CEO on the advice he would give to the Chancellor, Rachel Reeves. That's coming up. This is Bloomberg. Welcome back. The chief executives of the UK's largest banks are calling on Chancellor Rachel Reeves to oversee a change in the country's approach to long-term investment. Signatories of the open letter include the Lloyds Banking Group CEO, Charlie Nunn, who we just heard from, of course, as well as the Barclays chief executive, CS Venkatakrishnan. And he is standing alongside Bloomberg's Francine Lacqua at the UK Government Investment Summit for an exclusive conversation. Francine.
Thank you so much, Tom. I am excited speaking to Venkat again, Chief Executive of Barclays. Venkat, as always, thank you so much for your time. What would be your main message, actually, that Rachel Reeves and the Prime Minister need to give investors as they try to get investors to come in the country and deploy capital?
I think the most important thing is to recognize the strengths of the UK, not just institutionally, but economically. This is a government that's dedicated to growth. It's going to take the tough decisions to deliver growth in the country. And I think with growth comes a lot of opportunity in the UK. And the growth is going to come from investment and from easing up of restrictions. So I think we're going to see the start of what might be a very promising time for the country.
Where do you see that opportunity?
I think it'll be in some very important sectors at the high-tech level, in climate technology, in pharma and software, and down to more basic things like housing and agriculture, which are an important part of the economy.
Venkat, I think it's in February that you committed to deploy around £30 billion in the UK in the coming years. Is that easy to do? Do you know? Do you have a clear idea of where you want it to go?
Yes, we want to provide financing to corporates and individuals across the UK. We are going to, at the end of this month, complete a tranche of that, which is £8 billion when we buy Tesco Bank's credit card portfolio, which we then look to grow. And we've already started the turnaround in deploying assets for SMEs, for corporates, for individuals. And so we do think it's possible, and we will look for opportunities to fulfill that ambition of ours.
We'll hear more about this industrial plan, but when you look at some of the things that are challenging, we have, of course, the October budget coming up. Do you worry that they're not quite landing the message, that they're a little bit too negative about the economy, and so that hurts spending?
Well, I think it's important to land a positive message, which is that inflation is under control, growth is eminently possible, the UK is a great trading nation, we've got great infrastructure, as you see, and wonderfully talented people. We employ many thousands of them here at Barclays, not just in our retail operations, but in our investment bank, where our traders compete with the rest of the world, as you know. So I think it's important to land that message and to show demonstrated commitment towards the investment that's required to generate growth.
Venkat, we also know that the government is ready to spend $7.3 billion in taxpayers for a new fund. Do you know who else will come in from outside? Have you spoken to international investors who are quite keen to participate?
Yeah. So I think it's a very important start, the National Wealth Fund, which will then be leveraged with private capital to produce £20 billion plus worth of investments. I think the international investors, as well as domestic arms of international investors, and we have many of them here today, will see important opportunities, and it's going to be organized in a very professional way with the UK Investment Bank, and so we will see a lot happening there, I think.
I mean, does it feel good being in the UK right now, also because it's a little bit of a mess elsewhere?
Absolutely it is. You know, we were very lucky when we did our February announcement to have made that commitment then. That was before the elections. But we anticipated, and we said it then, that whether it was Conservative or Labour, you had pro-growth policies in the UK. And now when you see how smooth the election was, the handover has been, when you see problems elsewhere in the world, I think you realize the strength of the institutions in the UK and how committed everybody is to delivering growth.
This, of course, is an economy in transition. They want to build more houses. We'll have the industrial plan. It needs, again, to attract a lot of capital. What are you most optimistic about on where this capital concretely can go into?
I think it can go into some very important sectors of the economy. There will be on the riskier end, things like climate tech and biotech and pharma, not necessarily risky in some absolute sense, but obviously these are ventures, right? And then on the other side, I think when it comes to housing, I think the risk rewards will be extremely generous because I think housing is an important need of the country.
I mean, when you speak to a lot of investors, international, they say, look, what they worry about is the red tape. That other countries, including the US, if you want to put $1 billion in this country, you call someone and they help you find it. Do you think with the appointment of a new investment minister, that will be streamlined?
Yeah, I think so. I think appointing that investment minister and appointing Poppy Gustafsson with the background she's had as an entrepreneur is an important first step, and it's an important statement. I think the government recognizes that there need to be priority sectors, and then in those priority sectors you've got to push, and you've got to have investors convinced that they can get the implementation done quickly, and then hopefully it'll feed on itself.
What are you expecting for the October budget? Again, a lot of people in finance are worried about what could come. Does it make a material difference to investments in the long term?
I think there are two aspects of it. There's taxation, and then there's, of course, investment for growth. The investment for growth is really important, and I think laying out the quantum of money, how it's going to be generated and funded is important. But I also think there's a lot of capacity and willingness to invest. You've seen the appreciation in sterling in the last number of months, and so I think that there is a real force behind the UK.
When you look at taxation, again, does it send the wrong message if there's a tax on the banks, whilst at the same time you're trying to attract capital?
Yeah, I'm not going to speculate about where the taxes might fall, but I think, look, banks are among the highest taxed entities in the UK. We're an important part of the economy, and I always say it's really important for the UK to recognize that the financial industry is in its national interest. We are a big part of employment, we are a big part of technology, we are a big part of foreign imports into the country, revenues, exports which we make. And so we are a really critical part of this industry, and it's important to recognize that.
What do you need from the government?
Well, it's not so much what we need as how we look to help. We would like to help them mobilize the finance and mobilize the investment. So we are here to help.
Venkat, I think final question, when you look at inflation, when you look at, of course, consumer spending, you have the data to try and understand where the economy is going. Are you optimistic?
I'm optimistic from the following point of view. Over the last number of years, 2 to 3 years, the consumer in the UK has been extremely careful. Whatever the rate of inflation has been, what we see in our spending data is their spending growth has been half of that. That's because they're being careful with their money. Now they're saving a lot. The other part of this, we did put out a piece recently that there's about £430 billion worth of savings that the UK consumers have, which they can deploy towards investment. That's the private part that needs to be harnessed in this country.
What do you worry about the most in general? I mean, you run a very large institution that's globally recognized.
Well, there's obviously geopolitical risk. We have an important elections in the US in a couple of weeks that has to go through. We have to get to the other side and see what policy there might be, whoever wins. And then the new alignment with the emerging markets, with China, with Japan, and of course the UK and the US. Europe is important, but Europe also has a little bit of policy harmonization to do, shall we say.
Venkat, as always, thanks so much for joining us.
Francine,
so that was Venkatakrishnan from Barclays. With that, Tom, I'm going to send it back to you in the studio, and we'll have plenty more from the Global Investment Summit, of course, throughout the day.
OK, Francine Lacqua on the ground, speaking exclusively there with the Barclays CEO CS Venkatakrishnan. Francine, thank you. Let's just get you up to speed on some breaking lines in terms of the data out of China. We had the inflation print, a reminder that there is still a deflationary risk to that economy. But in the last couple of minutes, we've had some exports and imports data in terms of dollar numbers, the way it's categorised. Very weak when it comes to the export line for China, much weaker than had been expected. Exports inching up just 2.4% in dollar terms from a year earlier, so up 2.4% from a year earlier, well below the estimates, well below the previous month. Imports as well, climbing just 0.3% for the most recent month, the month of September. That export number, by the way, that increase of 2.4% is the weakest print that we've had in terms of exports out of China since April of this year. So a reminder of the challenges. That had been one motor of the economy that had been chugging along better than other parts, for example, the real estate part of that economy. But exports now softening in the most recent print that we get out for the month of September. Imports also cooling as well for China. And at a time, of course, when officials there are trying to reiterate and underscore and flesh out the policy response to try and shore up that economy. Now, China's military is holding drills around Taiwan, meanwhile, on the geopolitics, that it says are a warning to the self-ruled island's government to halt what it calls separatist acts. A spokesman says the exercises involve army, navy, air and rocket forces. Taiwan's defence ministry says that it dispatched forces to respond. Coming up, the US is sending an advanced missile defence system and troops that operate that system to Israel to deter Iran. We bring you the latest on the Middle East conflict. That is coming up next. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Tom Mackenzie in London. These are your top stories this Monday. Bouncing back, Chinese stocks rebound to cap their best day in nearly a week as Beijing reinforces its commitment to shoring up the economy. European stocks have given up their early gains. Making his pitch, UK Prime Minister Keir Starmer will unveil his vision for Britain to executives at the International Investment Summit here in London. We will be speaking exclusively with the Prime Minister later today. Plus, European car makers descend on Paris to showcase low-cost EVs in a bid to reverse slowing sales. We're live on the ground in Paris shortly with an interview with Renault's CEO. Let's get to the geopolitics and the crisis that continues to unfold in the Middle East. The US is sending an advanced missile defense system, including the troops to operate it, to Israel. In response, Iran's foreign minister has said that Tehran has no red lines in defending itself from threats and that the US is putting the lives of its own troops at risk. For more, our Horizons Middle East and Africa anchor Jemana Pasechi joins me. Jemana, talk to us about the significance of this defense missile system being deployed from the US to Israel.
Well, it's no coincidence that we also got some comments from the Iranian foreign minister there. And of course, all of this is anticipation of the Israeli response to the Iranian ballistic missile attack that took place on October the 1st. The Pentagon announcing yesterday that they are going to be supplying Israel with this advanced air missile defense system. It's known as THAAD. The acronym stands for Terminal High Altitude Area Defense. And essentially, it's a battery that is operated by about 95 American troops. And what is significant here is this actually will be the first time since the October 7 attacks that U.S. forces will be deployed to Israel to assist with Israel's self-defense. Now, again, it is anticipation of that Israel reprisal to the Iranian ballistic missile attack, but it also occurs on the heel of a further Hezbollah drone attack into northern Israel and central Israel. IDF saying this morning that 4 soldiers were killed, 7 critically wounded, and about 60 others wounded as well. Hezbollah Hezbollah saying that they're going to continue firing rockets so long as the Israel ground incursion in Lebanon continues. And so what you're seeing here, Tom, is very much an expansion of the regional conflict.
And we also, of course, have the human toll, and you talk about part of that there with the attack on the Israeli military and personnel in Israel by that drone. And then, of course, the events that unfolded in the last 24 hours or so on the ground in Gaza and the Lebanon.
Yeah, that's right. The Lebanese Health Ministry just putting out a new toll now, saying that the total number of people killed since the beginning of the conflict is now total 2,255. So that number continues to go up. There have been airstrikes, further airstrikes around southern Lebanon and in parts of the Shuf, which is the mountainous area as well. But the ground incursion continues, and actually the IDF allowed some reporters to come in to some of those towns by the border to show them some of the military infrastructure that the IDF say that they have succeeded at dismantling. But crucially here, and Tom, this is becoming a bit of a diplomatic issue, some of the tunnels that the IDF pointed to were located very close to the UN peacemakers, the UNIFIL units, bases in the southern part of Lebanon. And in the process of doing these ground incursions, it appears as though several or more than a dozen of these UN peacekeepers were also injured and wounded as well, which has prompted a response from the EU and even from the Italian Prime Minister himself. Giorgia Meloni actually put in a call to the Israeli Prime Minister Netanyahu over the course of the weekend, saying that these UNIFIL peacekeepers should be off bounds as far as the IDF is concerned. There are about 10,000 peacekeepers stationed in the southern part of the country. 1,000 of them are Italian. And what the Israeli Prime Minister is saying is that in some cases they are acting as Hezbollah human shields because they've allowed their bases to operate very close to Hezbollah infrastructure. So this has yet been another development that has occurred in the last 24 hours, in addition to ongoing strikes. In northern Gaza, 400,000 people have been told to evacuate. Central Gaza as well, further strike at one of the hospitals. A tent caught fire there, costing the lives of what the Gaza Health Ministry says is around 20 people. So further developments in the last 24 hours, and all this in anticipation to that Israeli response to the Iranian ballistic missile attack.
OK, Horizons Middle East and Africa anchor Jumana Pasechi with the important update there. Out of the Middle East, Jumana, thank you. Now, US President Joe Biden has announced $612 million in recovery aid for areas hit by hurricanes Milton and Helene. The funding will go towards strengthening the region's power systems. Biden says damage from Hurricane Milton alone could cost $50 billion. Kamala Harris has called out Donald Trump for keeping his medical records out of public view. That's after she released a detailed report by her physician that revealed she's in, quote, excellent health. The vice president needled Trump for keeping his records private, saying it's, quote, a further example of lack of transparency. Meanwhile, Trump pledged on Sunday to recruit 10,000 new people to secure the US-Mexico border. He also committed to providing a 10% salary raise for existing agents and a $10,000 retention and signing bonus. Coming up, we're going to head to the Paris Auto Show, where we're going to be joined by the Renault CEO, Luca de Meo. Stay with us for his take on whether Europe's automakers can stave off the competition from China. That conversation coming up. This is Bloomberg. Welcome back. Now, Boeing shares are lower pre-market. That's after the plane maker announced plans to cut around 10% of its global workforce. That equates, by the way, to roughly 17,000 jobs. Joining me now is our global aviation editor and editorial leader, Benny Camel. Benny, what do we know about these potential job cuts? What is prompting it? Will it be enough to stave off some of the damage that is inflicting this aircraft maker?
Yeah, so Boeing slipped this out late on Friday. They announced the job cuts as part of a wider package that they unveiled. They also unveiled fairly comprehensive charges to the tune of about $5 billion. That's coming up this quarter. They're going to delay some programs and so on. So really a sort of bouquet of fairly bad news. On the job cuts specifically, we only know the number, 10%. As you said, that equates to about 17,000 people. The company said it will be across the board, so executives, management, workers, which is sort of probably a nod at sort of some sense of solidarity. But we don't know exactly when they might happen. We don't know what it'll cost. If you try and get rid of 17,000 people, that usually costs something in severance. So those are all things that we don't know at this point. And we also don't know whether this is enough, whether 17,000 people will get them over the hump in terms of cost cuts, or whether more might be needed going forward. You did mention that they're in a very difficult financial situation. The earnings are due on the 23rd of October, so we'll know more then, hopefully.
OK, so we look ahead to the earnings. Whether or not, I guess, this is also a warning shot across the bows of those who are still on strike at Boeing. What do we understand about the CEO's kind of longer-term strategy, Benny, and how this move fits into that strategy? How convinced are investors that this new CEO is at least on the right path when it comes to the longer-term plan?
It's probably a little bit too early to say at this point. Kelly Ortberg has been in the job for about 2 months. That's not very long, given the sort of the size of the task that lies in front of him. Some investors we spoke to said, well, this all feels a little bit slapdash and a little bit reactive. There are no sort of contours of a larger plan visible at this point. So hopefully, come October 23rd, that's when he'll speak publicly for the first time. As part of that earnings release, we'll find out a little bit more. There was one sentence, sort of a half sentence, that was slipped into the release from Friday, which we thought was quite interesting. And it was essentially saying we need to think about what is core to Boeing. I'm paraphrasing here, sort of what is core to Boeing and what is not. And that might give people a bit of a hint of assets that may not be considered core going forward. And there are some, like the defense and space business, that have clearly struggled. And that might be something that going forward we will see. It could go as far as a wholesale breakup of Boeing. I'm speculating here. But that's something that people latched onto.
Well, it's interesting you talk about space with Boeing, because we had a reminder, of course, of the role, at least the leadership role, that SpaceX is playing, of course, owned by Elon Musk, in terms of the future of space and the ability to have one of their rockets re-enter the Earth's atmosphere and land safely. The images were amazing. What does it tell us about the role that SpaceX now has, Benny, and in fact how some of their competitors, whether it's Boeing or others, need to compete in the gap that they've created here?
Yeah, I agree. It was pretty remarkable to see the booster rocket be caught on that tower. And in some ways, it's sort of almost that split-screen movement. You've got everything going wrong on the Boeing space side. We have these astronauts who've not been able to come back in the spaceship because it was considered too buggy. And on the other hand, you have Elon Musk and SpaceX pulling off this quite remarkable feat. We're seeing the footage here right now with a landing. So sort of everything going right in space on one end and everything going wrong at the other end, with all the issues and the costs associated with that. That obviously means that this is a losing battle for Boeing, and it's something that will become more pronounced going forward as Musk puts more rockets up, does them in faster intervals. That's the other thing you need to remember. They're putting these rockets out there at a pretty sort of high clip, whereas Boeing is years behind. So one side moving quickly, the other moving slowly, and at some point it'll be very difficult for Boeing to catch up.
I like that characterization, the split-screen moment between SpaceX and Boeing on the situation when it comes to their ambitions in space. Global Aviation editorial leader Benny Kamel, thank you very much indeed for the latest. Coming up, JPMorgan topping third quarter expectations. That was on Friday, of course, as it kicked off the US bank earnings season. We will preview, though, what is ahead on Tuesday. The other big US lenders, at least a number of them, including Goldman and Citi, reporting later this week. We will give you that preview. Stay with us. This is Bloomberg. Welcome back. European car makers are looking to shake off their woes of the past year, showcasing their latest electric vehicle offerings at the Paris Motor Show. Let's cross over right now to join Bloomberg's Oliver Crook, who's on the ground at the auto show with a very special guest. Ollie.
Yeah, that's right, Tom. This is really where the rubber hits the road for the car industry. We talk about the macro, we talk about sales globally, but this is really the opportunity for the CEOs to put their products in front of the clients. And I'm very pleased now to be joined by the CEO of Renault, Luca de Meo. Thank you so much for joining us today on Bloomberg. So listen, you've launched all of these new cars, the EVs, in front of a backdrop of EV demand falling precipitously. How are you adapting your sort of strategy there?
I mean, actually, we have a strategy since 4 years on two legs. One is we have very strong hybrid technology. It's working pretty well. We're number 2 and number 3 in Europe on the hybrid segment, on all segments. But on the other side, we made the decision to develop 2 platforms, one for small cars and one for medium cars, full electric, because we think that these are 2 different sports, and an EV and an hybrid car are 2 different animals. And here you see the result. The good thing about that is that you can get out cars like Renault 5, Renault 4, or the Twingo, legendary product, with the best, probably the best EV platform for small cars in the world.
Right, and then in terms of this sort of magic number for the pricing on EVs, what do you think that is in order to have it really take off here in Europe?
Look, I think we speak too much about list price of the car. What you should include in the equation is also, the cost of using this thing. So normally charging is 50%, 30% of fueling, okay, and the maintenance cost that is actually half on a car. So normally we should talk about that. But if you look at the Renault 5, it's 25,000 euro as a starting price. It's actually 10,000 euro less than any of the competitors. Why? Because we actually focus on the whole ecosystem, the platform on this. With the Twingo that you see, close to us, we will be able in 2026 to go below 20,000 euro in entry price. I think it's a kind of a decent, proposition already. I mean, above 25,000 euro, you probably have 50-60% of the European market in general.
And really a difference from what we were talking about a year ago, right? In terms of emissions regulations, you've been very outspoken about this. The EU, on the one hand, wants to sell more EVs. On the other, is going to make it more difficult starting next year. How much do you how much do you think you're going to have to pay in terms of fines coming next year?
I mean, as an industry, we estimated that if the market continues at that speed, which is half of what we should be, for a number of reasons. It's not necessarily our fault as an OEMs, because we were the ones that have engaged 250 billion euro into the thing. So we have all interest that this thing works. So there's nobody in the industry that actually discussed the decarbonization path. Is the rhythm and the way and the mechanism to adjust to get to the target. This is the important discussion. But we calculate that it's more than a 15-16 billion euro if it continues like this. But then you have people like us that are trying to bring, let's say, a solution like this one. I mean, I give you an information for Bloomberg. We actually made 35-40% mix of EV this weekend on the open door in France.
Wow.
So it means that when you have the product, maybe you can change the destiny of the thing. But I speak as a president of the ASEA, I have to speak for the whole industry, right? And if you look at the speed, it's not enough. So we need everybody behind, also the consumer, because we are doing something that is good for the collectivity and society.
So what do policymakers need to do in order to get that? If they don't want to change their desires, how do they change the desires of the consumer?
I think we are, let's say, this is our responsibility with the product. I think we need to accelerate the charging infrastructure. I think we need to give transparency of the pricing of electricity and find a way to make it at least stable, this thing, so that the people. And I believe that in some of the areas you probably need some support to boost the demand because the demand is at that level is not natural.
Yeah, and then as president of the ASEA, do you see factory closures this year in Europe happening at a sort of more rapid pace?
if the thing goes like this, one of the solutions to make the math and to make the average fleet, one of the solutions is to actually stop producing combustion engine cars that are big offenders. And we made the estimation, it's like between passenger car and utility vehicles, like a commercial vehicle, it's probably, we estimate 2.8 million cars. This is 10 plants in Europe. So that's the, of course, the way you get there is, you buy credits to the Chinese to Tesla, you push the price of EVs so that you kill the baby, and the cradle, or you stop producing, let's say, combustion engine car. If you only do that, it's 2.8 million cars. So it's big story.
And then I have a quick question for you in terms of your view on the EU's approach on the tariffs with China. Do you see that you could potentially have a partnership with one of the Chinese companies here? Is that going to be the new model going forward, kind of inverting what we saw traditionally?
We always said, I don't comment on the tariff thing because this is almost a legal thing. This is based on an application of the rules of the WTO that everybody signs. So sure. I have nothing to say again.
Sure, but you adapt your business as a function of what happens with regulation.
Yeah, I adapt my business. I don't have a lot of transaction between China and Europe. This is true maybe for other companies. So I don't want to comment on that because this is nothing to comment from a business point of view. What we also said is that without a good cooperation with the Chinese, I think it will be more difficult to ramp up electrification in Europe because they have in their hands, materials, chemistry, gigafactory capacity, battery capacity, etc. So we need to find a deal with China, okay? And we need to get used to a form of co-opetition, or that means basically on the one side you compete, on the other side you cooperate, as actually they did with us when we went 25 years ago in China to take also advantage of the Chinese market.
And then a final question for you. Did you watch Elon Musk's presentation of the cybercab? What did you make of that, the autonomous driving?
But look, I think I think we are investing in autonomous driving. I guess Renault will kind of be a follower. We have initiatives with a company called WeRide to go to a level 4. I'm more interested, honestly, in looking at cars that are evolutionary, connected, intelligent, that can speak, where the man-machine interface is very modern. So I'm more interested on using the power of technology to make kind of machine become humans. That's, I think, most important. And then, so I don't want to comment on anyway, Tesla's endeavors and strategy. It's not, I'm not an opinionist. I'm a competitor. So.
All right. Well, Luca de Meo, thank you so much for your time there, and sort of the future of the car industry and how he sees this sort of future of the machine and human beings sort of collaborating in the future for this industry. Back to you, Tom.
Yeah, there we go. And a sub €20,000 EV, maybe by 2026. Bloomberg's Oliver Crook on the ground for us, speaking to the Renault CEO, Luca de Meo, at the Paris Motor Show. Ollie, thank you. We're going to be speaking, by the way, to the CEO of Stellantis as well, Carlos Tavares, at the Auto Show. You're going to be able to catch that conversation at 1:10 p.m. London time. That is today on Bloomberg. Now, to banks, and JPMorgan reporting a surprise gain in net interest income for the third quarter and raising its forecast for the key revenue source. JPMorgan kicking off then US bank earnings on Friday alongside rival Wells Fargo, with Bank of America, Citigroup, Goldman Sachs and Morgan Stanley all set to report later this week. Let's bring in Bloomberg's Charlie Wells then and start, Charlie, briefly the top line that came through from JPMorgan. This was a decent set of results.
It really was. I mean, they beat on net interest income, which actually, people were expecting a slight decline. They had a slight uptick there. Investment banking revenue was really positive. And you also saw a similar story at Wells Fargo. So, their investment banking fees were up 37%. And that is just the sort of thing that the Wells Fargo CEO, Charlie Scharf, is trying to push into as he tries to diversify that bank.
OK, Charlie, thank you very much indeed. We're short on time, but we have the other banks reporting tomorrow, including Goldman and Citi. And Charlie's going to be across that story for us with the detail and the context, of course, through this week. Bloomberg's Charlie Wells. A reminder, by the way, of some of the big executive and exclusive executive interviews that we have coming up on Bloomberg TV. We also have the UK Prime Minister, Keir Starmer, speaking with Bloomberg's head of economics and government, Steffi Flanders. That is at 2:30 p.m. London time. It's a Bloomberg exclusive, sitting down with the UK Prime Minister. And on Tuesday, we're going to hear from the former US President, Donald Trump, Republican presidential nominee, of course, sitting down with Bloomberg editor-in-chief John Micklethwaite for an exclusive interview live, 5 p.m. London time. Up next, it's Bloomberg Brief with Danny Berger in New York. This is Bloomberg.